Hey traders, Raghee here. Welcome to our January 19, happy Tuesday episode of Charts and Coffee. Great to see you all. Let's get the charts up here. There we go. Get the charts up. We should be good to go. All right. So happy Tuesday, gang. Hopefully the audio and video is working well. And all right. Excellent. Okay, gang. So let's get to it. I hope you enjoyed a long weekend and are ready to get back to work. Yes, the markets had a somewhat open day yesterday. I mean, clearly Forex markets are open. The stock market was closed, but futures had a half day. So kind of an odd day, not one that I typically recommend trading, but certainly I was here in the office doing some homework. And so we get to start our week, a truncated week. And let's see what this market's going to bring. All right. So as always, let's do this here real quick. You know, one of the things that I want to make sure that everyone's doing, one of the good habits that I think, let's talk about some good habits that you can build. One of them I alluded to Friday. Oh, no, sorry. We did have a Charts and Coffee yesterday. And one of them I alluded to was on Monday was the fact that on days where the market's sort of open, but we're not going to trade it, what am I doing? I'm looking at charts, rechecking my watch list, re-examining my open positions, diving back into my closed positions, putting my trades into the trade tracker that I prefer. And so what's another good habit? Speaking of good habits, starting off your day with, three economic calendars. We used to do this quite a bit in the earlier episodes of Charts and Coffee. And that is to start with Forex Factory. And gang, don't just look at today, and say, okay, well, it's Tuesday. We got TIX data coming out at the close. It's pretty quiet on the US front. Yes, but keep scrolling through, right? I've got a position in the Canadian dollar, whether that's FXC or whether that's 6C futures, that 10 a.m. Wednesday, the market's going to be thinking about that and gearing up for that today. All right. What else are we going to be aware of? I'm interested in the FXA and the 6A futures. The market, again, is going to be gearing up for that today as we have employment change and unemployment rate tomorrow. So a lot of times I think traders get a little too tunnel vision, a little too myopic about the calendar when you really want to look at it for the week starting on a Sunday or Monday, however you want to do it. Monetary policy statement, ECB presser on Thursday. Dollar's going to be in play. U.S. dollar futures, U.S. dollar by way of its relationship to the pound, the euro, the Aussie, the Kiwi, the loonie. That's been absolutely in play. And so again, we're going to have the ECB, which will be a catalyst for U.S. dollar movement. So there's a lot you can glean from just a quick scroll. Now you might say, Rog, why Forex Factory? We're not trading Forex. That is true. But from a data perspective, you're going to get really good global data. Like I said, if you're trading dollar index, the central bank events in other countries are going to be in play. If you're trading the currencies at all, futures or the currency share ETFs, you're going to want to keep an eye on this. All right, then we have some core retail sales. So from a data perspective, it's pretty darn quiet. Now, I mentioned three calendars. One of the things that Forex Factory sometimes doesn't have, and I don't know why, are some of the more minor FOMC speaking engagements. So I will double check Trading Economics, plural, tradingeconomics.com. And I'll check out if there are any. And we'll scroll through. We have Treasury Secretary potential. It looks like she's going to be shoo-in. But Treasury Secretary Yellen Senate confirmation hearing. Okay. What else? Do we have any FOMC speakers who are not Jerome Powell, but we want to keep an eye out for names like Clarida Williams. And we just scroll through to check that out because for whatever reason, sometimes Forex Factory will not include some of those events. So I just have a redundancy, right? The last calendar, and that's really more for my stock traders out there. And this will affect indices too, as Estimize. So ESTIMIZE, and Estimize is another calendar that I highly recommend everyone familiarize themselves with during the during earnings, right? So I keep a built-in calendar on the left side. You'll see along the margin there. I keep a curated list of stocks that are heavily weighted within the indices and heavily weighted within the sectors and the ETFs that I'm watching trading that impact the indices, that are heavily weighted within the indices. So that review takes 5 minutes, if that. Good habits, so you're not blindsided by events. One of the events we talked about, a lot of traders either didn't know or don't look at it this way. They weren't aware of Powell last week. And we know one of the tendencies, a high probability tendency, is for the market to rally in front of typically the session before and the session of before he speaks, rally in front of Powell. So these are the things that make it really easy to understand some of the more predictable parts of volatility. All right. Okay. So with that being said, let's head on over back to the charts. And again, keep those good habits in mind. All right, first request was for Facebook. Sure. I'm on the Trading View charts today, by the way, and taking a look at Facebook here. I will tell you, when it comes to Facebook, Tony, thank you for the question, number one. So what is the foundation on which I've built my trading career? Do I have an edge in understanding what the path of least resistance in the market is going to be? There is no better edge in the market. And again, very rare are the exceptions to this particular thing I'm going to say to you. There is no other better edge in the market than an uptrend. None. Most traders do very well in uptrends. Fewer traders do well in downtrends, and even fewer do well in chop. So if our job is to find out what the best environment is, what is the best weather, for us to be trading in, it is uptrends. So if I look at something like Facebook, which is actually starting to look like it might go into a little bit more weakness, but it's certainly chop. That's, I believe, starting to, we can see this right here. It's these previous lows here. I think we're probably going to retest that as possibly an oversold low. I mean, that could be interesting. But again, if my edge is sort of compounding the trend, finding a trending index, finding a trending sector, finding the trending stocks within them, and just adding on, stacking all the reasons why the path of least resistance is most predictably to the upside, this doesn't qualify. There might be some other names in the XLC that could look better than Facebook, but the XLC itself, where Facebook is the number one weighted name, doesn't even look all that good, right? So there's no compounding of the trend. There's no trend compounding here. There's no ability to say, hey, am I taking that index sector stock and looking it up? So I hope that makes sense. It doesn't mean that there's no way to trade it. It simply means, why would I want to prioritize this? However, that being said, where it's sitting at the moment is fairly interesting. That's about it. That's what I'd say. So if you've got an oscillating indicator that you like, slow stochastic, or maybe you've got one of the simpler trading proprietary indicators like Ready, Aim, Fire, that would be a good thing to refer to in a situation like Facebook. So thank you for the question. And it allows me to really emphasize, what is it that is going to be the driver of what I will curate to put on my list, on my watch list. What's on my radar and why? Tan, I love tan. So thank you, Pablo. Yes, if you've been following me here in the Charts and Coffee for any period of time, we are trend followers, right? That's what we want to take advantage of, the path of least resistance, the most predictable, highest probability environment for traders. So tan definitely ticks the checkbox there, and it's pulling back. It's at the 21. It's actually rallying back up. But yeah, we've been in and out of tan. We've been keeping an eye on tan. This is a great, this solar ETF has been a good one in our sector secrets. We've been, watching this on and off. And I am a fan in terms of wanting to focus on potential pullback buys on the TAN ETF. Maybe not the individual stocks in TAN, but certainly the broader ETF. Definitely love it. It is an interesting opportunity. Aggressively, it's not quite in my conservative zone yet, but definitely on the watch list, Pablo. So really, really good stuff. And yes, as always, rise and grind, traders. Whatever questions you have, please feel free to get them in there. All right, Starbucks. Again, Pablo, Starbucks is another one that we like in Sector Secrets, pullback buy, double green. So a question that I get sometimes is, Rog, what happens when a double green goes yellow? What happens when we lose that structure? Really nothing in terms of strategic changes initially. If the yellow persists, the uptrend will have transitioned to chop. But right now, yeah, really good market to think about to the long side. All right. Let's see. Michael, as far as that play on the Keystone pipeline, I was doing a little bit of research on that. And that's a great question. I haven't quite put my watch list together on the what happens on the cancellation, because it would be a little bit more of, two narratives. So I don't want to get into it because I really don't have a play yet, but this is where my thinking is. So if it's canceled, which it seems like that's what's going to happen, you have to find the relative outperformers within that narrative, which it looks like you've already been on top of. And so the question is, do the pullbacks that would inevitably ensue give us an opportunity on a buy, or does this turn into a V top? Because this is a huge narrative. It's one that could shake the foundation of the justification of an uptrend. I kind of would steer towards not wanting to play it. And then I'm wondering, well, do I just stick with the long RBOB or UGA and stick with long crude or USO? And I believe I will be re-adding the USO ETF to what is playable as an ETF alternative to crude oil. So I'm pleased about that. So I just might continue to stick with the long commodities play, which I think benefits either because of the reflation trade, so it's going to keep trucking higher, or it just gets some acceleration because of this. So that's the only place right now that, that I'm really focused on. All right. The commodities play. All right. Next up is, what do I think about BABA? Now that Joe, I don't know what that means, but BABA I can talk to you about. Some secret code language there. I mentioned that BABA has taken out that 1, 2, 3 reversal, kind of a Dow reversal play. I'd like to see it get above the wave, but I'm not one to pick bottoms. But if we are going to get into bottom picking, we at least need to have a setup, and a setup in this case would be this pattern here where it's, this, breaking that, and we're going to look for the market to keep going higher. So, it's qualified as that, but I'm not in it. I'm not putting any skin in the game. I am not in it. So let me make perfectly clear. I can draw some squiggles on the chart, but it doesn't mean that I'm putting any skin in the game. Mainly because, look, do I think that could happen? You know what I'd rather do? I'd rather take a look at, say, KWEB, which kind of takes us back to what I'm doing in the Sector Secrets Mastery, which is, can I look at KWEB? Can I look at MCHI? Can I look at FXI and focus on places that are healthier but have exposure to BABA? So what I would recommend you do is think about, well, are there places where BABA is in play from a ETF weighted perspective, and then maybe make a bet on those so you're a little bit more, diluted, right? Or you've got to play on BABA, but not quite so much, on like sort of a zero margin for error in case some other non-technical, non-business related aspect of BABA unwinds. Because remember, the BABA narrative is very much this political Jack Ma. Where is he? It's kind of an ugly narrative. So I would just assume either dilute my exposure, KWEB, right? Or avoid it altogether. Okay. All right. So let's see. So yeah, that's very much at the heart of what we do at Sector Secrets. Can I share the list? Phillips, Philip, I'm sorry, Phillips Playland. The list of I don't follow. Sorry. Going to the next question. AMD earnings are near. Really good point when it comes to AMD. So, gang, I'm gonna tell you straight up. AMD was a nice double green. Got a little shaky. Looked like a potential buy. Let's talk about risk here for a moment, because I think someone in my position really does have to be very upfront about what happens when a market doesn't do what they thought it should do. And even more importantly, how you can limit how much a market is going to hurt. I live by handling paper cuts. Paper cuts are fine with me. Paper cut, little nicks, right? I think what happens to a lot of traders is that they don't have a way in which to qualify where what I call the point of validity for a trend is and what their percentage risk limit is. And what that means is they let a paper cut turn into a full-on amputation, right? They let a trade. So this one I thought was going to do what it's done before, right? Yes, we're really close to earnings. Typically, if we're going to see a double green, we'll see it move into earnings fairly bullishly, but this one broke support. Done. Out. Paper cut. Keep that in mind. Yeah, they sting. They hurt a little bit. Just to remind you that it could be a lot worse. So please think about risk. You know, I think a lot of times it's easy for a lot of traders kind of in a public position with their trading to just talk about, well, you know, like a rap song, all I do is win. Yeah, that's a bunch of garbage, right? Any one of you who've watched any of the webinars that I've done in the past, see this image right here? This is just one shot, one slide from the webinar that I did Wednesday before last. And the cool thing about this webinar is I discussed the fact that, yeah, you know, someone in my position needs to say, yeah, you know, I win a lot. However, are there losses? Of course, right? But look at how limited the size of the losses are, right? Versus what we're looking at in terms of the window of gains, and then your kind of your home runs and your triples and your grand slams. That's really important, gang, to point out. And I think this little graph of my positions from 2020 really pan that out. So AMD is a really good example of, let me go back to the chart here, of, hey, when it's not working and the structure's lost, there's a percentage threshold that I operate by, and I don't let something turn into much more than a paper cut, right? All right, so let's go back up to, yeah, the shout out to DJ Khaled. Oh, gosh. Yeah. All right. So let me get back up to the questions here. Oh, gosh. It's almost time for me to head into the futures room. What do I think about gold? Marty Jean, I have not been recommending gold, a little bit more silver until it had that 2x daily price movement range day, and copper. Gold is still a buy. It's just not my favorite right now. I think it will become something we can fade. It will be a fade initially. And so I've done some free videos on gold, Marty. So check out the Simpler Trading free videos, and you'll see I've done quite a few videos on gold. To your other question on General Motors, I've liked General Motors as a name within. So think about it this way. General Motors has exposure in a key ETF that we look at, and it's actually been one of the very quiet relative outperformers. I haven't been trading it actively, all my cards on the table, but it has merited a lot of attention to the upside in terms of bullishness. So I would keep an eye on pullback opportunities. No doubt. No doubt. Okay. So then let's see what else we have here. AMD, we covered AMD. What about Apple? Sure. So Apple, again, let's go back to what the heart of what we want to do is. It's all about finding those trends. It's been very bullish, right? And then now it's recently gone a little neutral, right? A little bit of a yellow, which doesn't mean that we can't trade it. It just means that I'm going to be a little bit more conservative, but my bias is still very much to the upside. The only issue is earnings. I don't like buying options with such proximity to a IV crush type possibility. Well, and the IV crush, gang, for us is, well, for the way that I play and the way that I teach to play earnings, is not going to be as big a deal because we're not going to hold through earnings. We're going to hold to. In other words, I don't mind playing to the earnings date. I don't mind playing post the earnings date, but I don't want to play through. It's very, very rare that I will do that. Super rare. All right. So with that, gang, I am out of time. It's time for me to head over to my day job over in the Simpler Futures room, where we're going to do some very selective and thoughtful, waiting for our pitch day trading. Okay. My day traders out there, yes, we had that day off. You might be feeling a little twitchy. Do not succumb to that twitchy trader who has access to day trading margin. Be careful, be discerning, wait for your pitch. That's exactly what I'm going to go and do now. And so I will see you all tomorrow back here at 9 a.m. All right, gang, thanks as always for being part of our Charts and Coffee crew, and I'll see you tomorrow.